You probably think of money as something simple. A dollar is a dollar. It buys groceries, pays rent, or goes into savings. But behind every dollar lies a system most people never question. A system controlled by central banks. The truth? Money itself is an illusion. Central banks don't just manage it, they manipulate it. They decide how much is created, how much is worth, and who benefits from the system. Spoiler alert, it isn't you. The Federal Reserve in the United States, like the European Central Bank, the Bank of England, or the Bank of Japan, doesn't merely protect the economy. It runs the economy by controlling interest rates, printing money, and bailing out financial institutions. Central banks play a game where the rules are tilted against ordinary people. When they flood the system with cheap credit, asset prices soar. But who owns those assets? The wealthy, the insiders, the institutions. Meanwhile, ordinary workers find their savings eroded by inflation, their wages stagnant, and their debts heavier than ever. The game looks complicated, wrapped in jargon like quantitative easing, liquidity injections, or balance sheet expansions. But strip away the technical language, and the truth is brutal. Central banks are referees who secretly play for one side, and that's not an accident. It's by design. Central banks didn't always exist. In fact, America once fought tooth and nail against them. The Founding Fathers distrusted concentrated financial power, fearing it could enslave future generations through debt. But money is power, and power always finds a way. In 1913, after years of backroom negotiations between bankers and politicians, the Federal Reserve Act was signed into law. Sold as a way to stabilize the economy, the Fed became the most powerful institution in America, yet it's neither fully federal nor truly a reserve. Its origins weren't democratic. They were secretive. In 1910, on Jekyll Island, a group of bankers and senators met in private to design the blueprint. Their goal? A system that could bail out banks in crises while quietly shifting risk onto the public. From the start, the Fed was a cartel disguised as a safeguard. It was designed to serve the banks first, and the people second, if at all. And once in power, central banks didn't just stabilize money. They weaponized it. Wars, depressions, and financial crashes all became opportunities to expand their influence. Every crisis made them stronger. When central banks print money, it sounds harmless. After all, what's wrong with creating more dollars? The problem is, when everything inflates, nothing holds value. In the 20th century, the dollar lost more than 95% of its purchasing power. What your grandparents could buy for a few cents now cost you several dollars. That isn't by accident. It's the direct result of central bank policies. Every time the Fed injects money, the wealthy get it first. Banks and corporations borrow at low rates, buying assets that soar in value. By the time that money trickles down to ordinary workers, prices have already risen. You're left paying more for less. This hidden tax, inflation, robs savers and punishes the middle class. Worse, it traps people in debt. Because while your wages stagnate, your loans, mortgages, and credit cards don't shrink. They grow heavier in real terms. Central banks sell the illusion of prosperity. The stock market goes up, but so does the cost of living. Homes appreciate, but they're unaffordable. Wealth grows on paper, but real purchasing power vanishes. This isn't stability. It's slow-motion theft. To truly understand the game, follow the crises. The Great Depression of the 1930s, the Fed's tight money policies deepened it. World War II, financed by massive government borrowing underwritten by the Fed. The 2008 financial crisis, caused by reckless banking practices, then rewarded with bailouts. Notice the pattern. Crises always expand central bank power. Each disaster justifies new tools, new authority, new interventions. After 2008, the Fed unleashed quantitative easing, creating trillions of dollars to buy toxic assets and pump liquidity into markets. Who benefited? Wall Street. Who paid? Main Street. Ordinary savers saw near zero interest on savings accounts while asset owners grew richer than ever. Then came 2020. The pandemic hit, and once again, trillions were created out of thin air. Stimulus checks kept people briefly afloat, but the real winners were the corporations and hedge funds. By 2021, billionaires added trillions to their net worth, while ordinary workers faced rising costs at the gas pump and grocery store. Central banks don't fear crises. They thrive on them. Central banks aren't just national players. They're part of a global cartel. The Federal Reserve, the European Central Bank, the Bank of Japan, the Bank of England, they coordinate policy, moving interest rates and money supply in tandem. And behind them, the Bank for International Settlements in Switzerland quietly acts as the central bank of central banks. This is no free market. It's managed, coordinated to protect the system, not the people. Nations may appear sovereign, but their monetary policies are often chained together. Developing nations feel this most brutally. When the Fed raises rates, emerging economies suffer capital flight. Debt denominated in dollars becomes unbearable. Entire countries are pushed into crisis, not by their own citizens, but by the decisions of unelected bankers thousands of miles away. The game isn't just rigged at home. It's rigged globally. The next stage of the game is already here: central bank digital currencies, or CBDCs. On the surface, they look convenient. Instant payments, no cash needed, safe and secure. But behind the marketing lies the most dangerous tool of control ever invented. With digital money issued directly by central banks, every transaction can be tracked. Spending can be monitored, limited, or even blocked. Unlike cash, which is anonymous, CBDCs erase privacy. Imagine a world where your bank account could be frozen not for crime, but for disobedience. And make no mistake, this isn't speculation. Nations from China to the European Union are already piloting CBDCs. The Federal Reserve openly studies them. The dream of total financial surveillance is moving from theory to reality. The rigged game isn't ending. It's evolving. Central banks claim to serve the people. They promise stability, prosperity, and growth. But history shows the opposite. They create cycles of boom and bust, bail out the powerful, and leave ordinary people holding the bag. The system isn't broken. It's working exactly as intended. A rigged game where your money is devalued, your debts grow, and your future shrinks, while insiders get richer. Rome fell under the weight of debased currency. Weimar Germany collapsed under hyperinflation. Countless empires crumbled because of monetary manipulation. And yet here we are, playing the same game. The question isn't whether the rigged system will end. The question is when, and what comes after. History teaches us one thing: when money is manipulated long enough, collapse follows. The only defense is awareness, to see the illusion for what it is, to question what central banks don't want you to ask. Because once you realize the game is rigged, you can finally decide how to play it. If this gave you a new perspective, click subscribe. History has the answers, and I'll show you where to look.